Okay, so this is the solution to the J.J. Watt example, and it's a pretty straightforward problem, nothing too super tricky going on here. I have, again, the contract price, the current year costs, costs from prior years. I don't have the total cost to date. Oh, I tricked you by taking out a row. And people get really crazy on these problems where they look at this table, they memorize this divided by this plus this is going to equal my percent every time, all the time, and don't do that. Just don't do that. It's memorization, and it's going to get you in trouble. What if I had total costs to date as these numbers? Well, then you'd have to take this number, subtract it from this number to figure out the current cost in a year. No, that's not tricky. It's not tricky. It's just having you actually read and understand what the hell you're doing. So be alert, understand, the numbers. What's behind the number? What does this number mean? And don't just go on autopilot when you're doing accounting, because you're going to screw up somebody's books and someone's going to get mad. So be thinking, right? So we're going to go through this. In 2015, I take the costs to date, which is just this year's costs, divide them by the cost to date plus everything to complete, and that gives me this ratio, which turns into 38%. The contract price is 1.95 million, and then that gives me the amount of revenue I can recognize. This is all revenue from 2015, so nothing to subtract off. The costs from 2015, and then that gives me the gross profit from 2015. So 741 and 66,000. Now for 2016, right, we have the current year costs and the costs from prior years. That's our total cost to date. That's our numerator. Then we have these guys plus what we expect to complete. That's our denominator, which is a slightly modified denominator from the prior year. Oops, sorry. That's our denominator. It's slightly modified from the prior year. And this gives me 67.1% of completion. And I would multiply that by 1,950,000 to figure out what's the revenue I could recognize from both 2016 and 2015. Subtract it off from the revenue I recognized in 2015 to get just what I could recognize in 2016. The costs from 2016 gives me the gross profit from 2016. So $17,450 of gross profit and $567,000 and $567,450 of revenue. And finally, the final year, the easiest year, 100% complete. The whole contract price can be recognized, except that we've already recognized revenue of that amount. So we subtract that amount, which is easily gotten from your prior year calculation, and then that gives you the revenue from 2017. The revenue from 2017 subtracted off the costs from 2017, the $600,000 that was spent that year, and that gives you the $41,550 gross profit from 2017. So that is the amount of gross profit I would recognize. Again, you can check yourself, make sure that all of the revenue recognitions add up to the total contract price. Make sure that the gross profits all add up to the total contract price less the total costs, which in this case were $1,825,000. I also asked you to do the journal entries, so let's take a look at those. And I'll put this up here just one more time for you to look at and pause if you need to write anything down. But again, remember, repeat the process. Don't, always have a plan of attack. Always do the counting problems the same way. It'll help you remember what you're doing, why you're doing it, and set a standard so that if your brain leaves you for a second, you'll at least have that rote memory working for you. Right? Now, these are the journal entries for 2015, 2016. Notice that the billings and the accounts receivable don't go, they have no bearing on the amount of revenue that I recognize, right? So they are just to determine what the billings account is and also determine what the construction in progress account will be after you net billings. So, just moving the journal entries over into the T accounts, this is again where T accounts will come very much in handy. 675 debit to construction in progress, a 66,000 debit. Remember, this is my gross profit here because this is expenses, this is revenue. So as of 2015, the ending balance in my construction in progress account would be 675 and 66. Remember, we call it sometimes it's called the costs and profit, because that's what it tracks. $741,000 balance debit. The billings would just be affected by this amount here, 600,000. So at the end of 2015, I would have a contract asset because cost and profit are in excess of my billings. 741 minus 600 gives me a $141,000 contract asset. It would be a current asset. Because remember, this is going to be something that is liquidated within the construction company's accounting cycle. It is inventory. You could keep track of accounts receivable, except that it doesn't really matter. It would matter if you're doing this for a company, but in the purposes of our problem, it doesn't really matter. The cash, again, same thing. They're spending cash to make progress on the construction. Who cares? Who knows where they started with cash? Who knows where they're ending with this cash? Really, what we're concerned about is how is this construction progress account coming along? How much have we billed? Then in 2016, of course, remember to carry your ending balance. These are real accounts. They don't get closed. So this is going to be a $741,000 debit balance at the beginning of the year. This is going to be a $600,000 credit balance at the beginning of the year. And then we just add in whatever we've journalized throughout the year. $550,000 is the construction in progress account from any amounts we've spent. That was the current year costs. Current year costs and revenues give rise to gross profit of $17,450. And then we made additional billings for $475,000. So then again, you just reconcile those accounts by adding them up, plus 550. So 741 plus 550 plus the gross profit gives me $1,308,450. The billings, $1,075,000. And so again, I'm going to have a contract asset because the construction in progress account is larger than the billings account. When I report that contract asset on the balance sheet, I want to subtract off the contra account which gives me the 1038 minus 1075, $233,450 of a contract asset. And again, that would be a current asset. Okay, so that's the JJ Watt example. I'll just go ahead and put this up again so that you see the entire problem laid out. It is important for you to understand what is going to be put on the balance sheet and what that amount will be, how this real account interacts with its contra account, and what goes into this real account and the contra account. Okay. The loss on an unprofitable contract is something that gives students a lot of trouble, right? So the big rule on the loss on an unprofitable contract is that the company has to recognize in the current period the entire expected contract loss. Now, an unprofitable contract means that the total revenue is eclipsed by the total costs. So we're actually going to end up, upside down on this contract. When that happens, as soon as we know we're going to end up upside down, we have to report the entire loss, that is total costs less the total revenue, in that year. So let's look at this. Again, 2014 is the same. I've went ahead and recognized the appropriate amounts of revenue and gross profit. We move down to 2015. Things have changed a little bit. All right, we still have the total cost to date being $437,400. Now, the estimated cost to complete have shifted, again, gotten higher. Which gives me 437,400 divided by 683,438. Okay, now notice the total costs to complete have gone over the amount of the contract, 675, right? So contract is unprofitable. You note that just so you don't sort of continue along all the way. Now, this is where people start getting a little confused. I'm going to recognize revenue in this year. That's okay, right? I still have revenue. I'm still going to make $675,000 of total revenue. It's just that when I compare them to my costs, I'm going to come up negative. But I still recognize 675 of revenue. So I go ahead and carry out this calculation. It turns out to be 63.99. So again, round that to 64%. Multiply it by the total contract price. And that says I would recognize $432,000 of revenue. And that's revenue from 2015 and 14. And again, I want to subtract off that revenue to determine how much revenue I want to recognize in this year. So that part remains the same. Now, this is what starts to get a little different. Because of this rule, I want to recognize the entire expected contract loss in the current period. So that means that this has to be for the entire expected contract loss. Well, what's that loss going to be? The loss is going to end up being $683,438 less 675, and that's just calculating the contract price less the total amount that I think I'm going to lose at this point. That becomes $8,438. That's the amount of the loss I want to report overall. And now overall is a very important word here, because this is when students start to get confused. They're like, oh, okay, cool, I got that. Now, what I'm going to add is I can't just recognize this much loss in this year. Why? Because I've already recognized profit on this contract. And it was accurate in that year that I recognized that much profit. But if I want to recognize an $8,438 overall loss, then I have to record a $27,188 loss. Why this number? 8,438. I want to report, plus I need to reverse 18,750 from the prior year. So this is the amount of the overall loss, but I also have to reverse any profit from the prior year, and that gives me an overall loss that I need to record. So this is my gross profit, well, in this case, gross loss that I want to report. Now, how am I going to do that, right? Well, I'm going to do that because I'm going to accelerate some costs from 2016 into 2015. And I notice that if I take 263,250 and subtract off 287,400, I'm not going to quite get my desired overall loss. So how much am I going to get, and how much do I have to borrow, right? So if I take 263,250 and subtract off just the current year cost, 287,400, I get 24,150, and that's a loss. But it's still not enough, right? I wanted 27,188, and I don't have quite enough here. How much more am I going to have to accelerate in order to meet that? Well, this less that. I want to get down to 27,188. That means I have to borrow costs of 3,038. So this is the cost in 2015. This would have been my gross profit, except that I want to report this gross profit. So I have to borrow costs from 2016. I'm accelerating a cost into the current period. And so the total amount of costs I would recognize in this period would be 287,400 plus the costs that I borrowed. So overall, that's $290,438 in order to get to the desired loss. So I just borrowed some costs, right? Now let's look at 2016. And again, it shakes people up that we're recording revenue when we're recognizing an overall loss. But remember, it's fine to record revenue. It's just that the costs are over that revenue amount. Again, we have 100% of the job complete. So we recognize all of our contract revenue. We recognize the fact that $432,000 of that revenue came from prior years, which means that we have $243,000 of revenue recognized in 2016. Now, I would subtract my current year costs in order to get the gross profit for that year. But remember, my current year cost, $246,038. How much did I borrow? Well, I borrowed $3,038. I borrowed that in 2015. And so that is not going to be reported again in 2016. Well, that brings it down to $243,000, which means that I have $0 of gross profit in 2016, which is fine. In fact, it's exactly what I wanted, right? Because I had to report the entire loss in this year. So it was the loss I wanted to report plus the reversal of that gross profit in the prior year, $27,188. Well, once I net these two out, right, I get $8,438. So that's the total loss I want. If I had any gross profit in this year, it would alter that, right? Or if I had more of a loss, it would alter that. And I don't want to alter that. That's where it needs to be, right? So $0 of gross profit and $243,000 of revenue. So think about it, let it sink in. Again, this is an instance of conservatism. We're accelerating a loss or accelerating the recognition of a loss by borrowing costs from 2016, placing them in 2015 so that we get the appropriate amount of gross profit. Now, it is worthy of bringing up the completed contract method again, because this is a little different. Right? The completed contract method wouldn't have recognized any gross profit or revenue in this year. However, they would recognize the loss in this year. They would still want to recognize that loss. Now, they don't have to recognize $27,188. The only reason why we recognize $27,188 is because we recognized some profit in the prior year, but we didn't recognize any profit in the prior year under a completed contract method. So we only need to replicate $8,438, which is our desired loss. We don't have to reverse the $18,750. And in order to get there, we do have to recognize all of the revenue and also all of the costs. So that was what it would look like under the completed contract method. All right. So the rest will be included in the problems that I work through with the other chapters, or with the same chapter, the other modules, and that is the entirety of Chapter 5.